Hello amazing traders, welcome to my YouTube channel. My name is Victor and today I'll be taking different route entirely to teach us how to be a profitable trader. And today I'll be teaching us different dimension entirely on how to be a profitable trader. In order to be a profitable trader, understanding of how market works, both technical analysis and fundamental analysis. If you can understand both, combining both together to make a distinct decisions will be the beginning of your trading career. If you can understand how technical analysis works, combined with fundamentals, you will make a lot of money in the market. And today, I'll be teaching us the basic knowledge of how fundamentals affect good in relationship with DXY. Without further ado, let's go into today's topic, understanding the relationship between DXY index and gold. Introduction. The US dollar index, which is DXY, is a widely followed indicator of the value of the US dollar relative to a basket of foreign currencies. As gold is priced in US dollars, changes in the value of dollar can have impact on the price of gold. In this article, we will explore the relationship between the DXY index and the price of gold, and why is this relationship important for gold traders and investors. The DXY index. The DXY index measures the value of the US dollar relative to a basket of 6 major currencies. These currencies include Euro, Japanese yen, British pound, Canadian dollars, Swedish krona, and Swiss francs. The index is weighed according to the amount of trade conducted between the US and other countries represented in the basket. As such, it provides a measure of US dollars strength or weakness relative to these currencies. United States of America is the powerhouse of economic sector in the world. That is, the most powerful countries in the world is the United States. The largest reserve of gold in the world is in the US. So which means that the government policy of United States will have both positive and negative effect on gold. If there is weakness in dollars, it will have positive or negative effect on gold. So let's move forward. The price of gold. Gold is a precious metal that has been used as a store of value for thousands of years. It is traded on commodity markets around the world, and its price is quoted in US dollar per troy ounce. As gold is priced in US dollars, changes in the value of the dollar can have impact on the price, because when people are scared or they are afraid, when there is economic uncertainties, people tend to drop dollars to buy more gold. For example, when Ukraine and Russia war started, there was a massive drop on US dollars and a lot of investors buy excessive gold to keep, because if there is World War III, nothing will happen. A lot of currencies might fail, but gold cannot fail. Please, if you have not subscribed to this channel, please subscribe, click, like, share, and follow me, and drop your comments below. Let's move. The relationship between the DXY index and the price of gold. When the DXY rises, it means that the US dollar is strengthening relative to the other currencies in the basket. This can make gold more expensive for investors who use other currencies to purchase it, since they will need to exchange more of their own currency to buy the same amount of gold. And as a result, a rising DXY index can put downward pressure on the price of gold. Like I said earlier, whatever happened with United States of American dollar have positive or negative impact on gold, because the strength of any economy is in their currency. Check your country. If your country has economic value, it will reflect in your currency. And that is exactly what is happening to United States American dollars. They are the powerhouse of the world. They are the most powerful countries of the world. And as a result of that, their money and gold are working together hands in hands. Conversely, when the DXY index falls, it means that the US dollar is weakening relative to the other currencies in the basket. This can make gold relatively cheaper. This can make gold relatively cheaper for investors using other currencies, which can increase demand for gold and drive up its price. What are the other factors that also affect gold and DXY? Why the DXY index is an important indicator of the value of the US dollar. It is not the only factor that influences the price of gold. Other factors such as global economy and political developments, interest rate, and inflation can also have a significant impact on price of gold. For example, there is an uncertainty about the future of global economy or inflation is high. Investors may turn to gold as a safe haven asset, regardless of the value of the US dollar. There will not be World War III, but if World War III is about to start tomorrow, people will drop United States. If there is imminent of major crisis in the world, people will drop United States of American dollars to buy gold, because currency might not be approved. But if you have gold, anybody in the world, even people in the village, we collect the gold from you as an exchange of value. Conclusion: the relationship between the DXY index and the price of gold is an important one for gold traders and investors to understand. A rising DXY index can put down pressure on the price of gold, while a falling DXY index can increase demand for gold and drive up its price. However, it is important to keep in mind that other factors can also have a significant impact on the price of gold. As with any investment, it is important to consider all relevant factors and do your own research before any decisions. Before any decisions. In conclusion, so with this basic structure, with this basic fundamental analysis, you can easily see that whatever happened in the United States have positive or negative impact on gold. That is, when there is a weak in dollars, gold is always rising. When gold is falling, dollars is receiving strength. So when you can combine these two things together, when you can combine fundamental analysis and technical analysis hands in hands, it can give you an edge over others in the market. Always remember, in financial market as a forex trader, money always flow from inexperienced trader into the hands of the experienced trader. Always remember that money will always flow from the hands of inexperienced trader to the hands of the experienced trader. If you can understand this principle and you can increase your versatility about the fundamental analysis on gold, which is the relationship between DXY and gold, it gives you an edge. So when you are opening your chart and you are trying to study the market, you have a clue of what you are doing. Because when you have the right knowledge, having the right knowledge can literally change your life. It can change your finances. You don't need to buy any signal. You don't need to follow any mentor. If you can follow what If you can follow me on this YouTube channel, you'll be profitable with time. So without further ado, let's go into live analysis to go and confirm what we have just studied now. Gold and DXY are negatively related. They are not positively related, they are negatively related. Gold and dollar index are negatively related. What does it mean? Most of the time, when dollar is buying, gold is selling. When gold is selling, dollar is buying. Dollar is buying, gold is selling, because both of them are store of value. Since United States is the most powerful country in the world with highest reserve of gold, and the US dollar is the most powerful currency in the world, that is one of the reasons that makes them to be negatively correlated. Welcome back. Welcome back to today's analysis. So this is dollar index for 4-hour time frame, and you can easily see example of what we are talking about. This is the massive drop of dollar index on Friday. So this is dollar index for 4-hour time frame, and let's see what is happening in daily time frame. This is dollar index on daily time frame, and we can actually see that dollar has been selling since June 28, 2024. So market has been creating lower high, lower low, lower high, lower low, lower high, lower low, and currently this is where we are. So we can see from our dollar index now, from the dollar index that dollar has been selling since June 2024, June 26 to be precise. Dollar has been falling effortlessly every single day. Let us now dive into gold to see what is happening. Exactly, we can actually see too that gold has been buying since gold has been buying for a very long period of time. Now this is gold in 4 hours, and we can easily see that gold has been doing since August higher high, higher low, higher high, and we are expecting market to drop for higher low for this week, because as long as market is here, there is high probability, high tendency that gold will sell this week, because in our dollar index, this is our dollar index. You can easily see here that this is, we touch it here, here. So as long as this third touch holds, then dollar will gain value this coming week. Dollar will gain amazing value in this coming week, though it might now do something like this, break this structure, come back here, and in order to come and break this structure back again. But for this week also, there is a high probability that gold is selling. Why? Because gold, this is all-time high in gold. This is the previous all-time high, which is 2,484 hands, and gold broke the 2,484 hands and is now 2,506 ounce. You can see this is very simple. Open your chart, go to 4-hour time frame, draw your trend line. Once you draw your trend line, duplicate it. Once you duplicate it, put it at the top, then find this part this key indicator called PATH, and draw and follow the patterns of the movement of the market. After following that, the next thing is to understand the reactions of the candlestick, and we can easily see now that this is 1 hour candlestick, and market is reacting to this key level. Despite that it is all-time high, right now market is reacting. So when market react finished, then when market is about to sell, I will be selling this market, but I'll be very very patient. I won't just click sell button, because you don't just open your chart, see the market is selling and enter. No. You must not do that. You have to understand what market is doing first. If you can understand what market is doing, then that one can give you clue of whether to enter the market or be patient. It is not every day you be clicking buy and sell. You cannot be trading every day. In fact, the richest forex traders in the world are not daily traders. They trade 3 or 4 times in a month, not every click. So before you click that sell button, you have to understand, you have to allow market to speak to you. You have to allow market to show you where it is going. With the fundamental analysis that we have just described now, combining it with what gold is doing, then you can now make consistent decisions. You can now make right decisions on what is happening. So you can see now that just on our analysis, on our fundamental analysis, that gold and DXY, they are negatively correlated. Though it might not be, no currency or indices or coin or any chart is 100% correlated, or there is no 100% correlation, but there is 90, there is 85, and we can easily see that when gold is buying, dollar is selling. When dollar is selling, gold is buying. Gold is buying, dollar is selling. Dollar is selling, gold is buying. Though there is not holy grail, to disclaimer, there is not holy grail, but there are rules and regulations that guides the market. So if I were you, the first thing you need to do once you want to trade gold is to come to the dollar index, do a basic market structure, understand it. Now you can see now that dollar index, from what we are seeing here, is about to buy. And how do I know? It's simple. This is 4-hour time frame, and this is massive support level. So until market break this key level, if market break this key level, that is another zone entirely. But if market could not break this key level, then it means that there will be massive strength to dollar this week. You can see, simple as ABC. Now I know that dollar is about to receive strength. There will be massive influx of dollars. Dollar will regain strength. Now if that is the case, just flip it back, flip it to the other side, and go into your good analysis and go and examine what market is doing, and be patient and bring out your indicators, trend line, Fibonacci, support and resistance, and draw your major key levels and be patient. You have to be patient enough to understand what market is doing. For example, me right now, you can see now, if this 4-hour closed this way now, this is massive indecision candle. That is, both the buyers and the sellers, both of them are in the market. If I will buy this market right now, I will have to wait to let this market just break this resistance, break it out, retest. Once it retests, I can buy. But as long as market could not be able to break this resistance level, then I'm expecting massive drop in gold. I'm expecting massive sell in this market. And if I'm expecting massive sell, then I'm expecting market to drop from here to here. And that is the simple analysis about market. You don't need to take analysis in a very, very complex. No, 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 no. Take it simple. Understand, empty your mind. Learn what, allow market to speak to you. Allow market to speak to you, and that is why you must be knowledgeable first. To be a profitable trader, you have to be knowledgeable. You can't be lazy about the market and expect you to understand what is happening in the market. You have to be committed. You have to show passion. You have to give it all to understand what market is saying, because understanding what market is saying is where your profit lies. When you can make the right decisions in the market, right decisions is what will lead to right result. But if you cannot make right decisions, then how can you know what you are doing? And always, like I used to say on my channel, please and please and please, risk management. Don't deposit $200 into your brokerage account, and because I now do analysis and it makes sense, you now want to flip. Don't flip. There's no successful trader, there is no profitable traders out there that is a flipper. Forget about what you are seeing on social media. If you want to be profitable, learn how to catch the market in a very big peak form. By the time this market is ready now, this is massive sell. Massive sell. Imagine how many pips is this? This is 293 pips. So if I can push with 353 pips, I will be able to catch up 330 pips. And if this if the sell side liquidity continue, this is 476 pips on ordinary gold with one entry with just 53 pips lot size. I didn't say you should choose 53. Choose your stop loss, your risk management reward based on your account. Based on your account, how much do you have in your brokerage account, or if you are trading with a prop firm. These are the kind of, because I'm a swing trader, these are the kind of simple basic analysis that will give you an edge over others. Like I said, to recap, please, if you are not subscribed to this channel, click the subscribing button. Please encourage me. Click the subscribing button. Please click the subscribing button. Once you click the subscribing button, share with your friends and family. Let them know that Trader Victor is here to give them raw knowledge about how to be a profitable trader. So you can say, so with this basic market structure, your own duty is to be patient. You have to be patient. Once you are patient and you understand the movement of the market, then it gives you peace of mind, because nothing excites a trader, nothing makes someone to be a profitable trader when you know what you are doing in the market. When you are patient enough, you are waiting to pick the right market, to pick the right A setup in the market that can give you massive profit. Because if you can pick A setup and you are catching 1:5, 1:6, 1:7, 1:8, even sometimes 1:10, that is one of the advantage of being a trader. Not just 5 minute, 3 minute time frame that market is doing you anyhow. You are clicking and you are sweating and you are depressed and you are angry and you don't even know, you want to bust your phone, you want to destroy your laptop, you want to destroy your desktop. No. Be patient. Come, zoom out, come to 1 hour, 4 hours, be quiet, listen, let market speak to you, let the candlestick form. Don't be in a hurry. Even if you do the analysis or you listen to my channel and maybe one or two things you couldn't do your own personal analysis and you miss it, it's okay. Go back again, do the analysis and be patient. When you are patient enough and you pick a setup, it gives you all the profit you need. You don't need to trade every day. But for that one to happen, you have to understand. You have to know what market is doing. Please, if you have not subscribed, please subscribe. Share the sell button. Please subscribe. click the link, share it with his friends and family, on your notification, watch the channel, and we will grow together, because it is my duty, it is my happiness that you become profitable, you become extremely profitable. You can analyze market yourself. You know what is happening in the market before entry. When you know what is happening in the market, and you're able to make the market, that is the benefit. That is what it means to be a profitable trader. Not just click buying and selling and buying and selling. And this is good now. This is 4-hour time frame on good. Good right now is on all-time high. And if gold is on all-time high, so gold is on all-time high, so it simply means that market is about to drop, because nothing just move forever. It's either market come to this level to test it or break it. If market break this key level, break it to this level, retest, then that will be massive drop. So market have two options. It's either it retest this key level and the buying side liquidity continue, or it breaks that resistance and the sell. But we have to be patient. We have to understand what market is doing. You need to let market speak to you. Give it time. Don't just rush into sell and buy. If you can understand the movement of the market, so you will be able to be profitable. So combining the DXY chart, which is the negative correlation to good, and using both analysis together, it gives you an edge. It gives you the clue. And that is it. That is it. So let me see some example. Now, this is 4-hour time frame on, let me see one market. Okay, now this is 5th of August. So let's go and check DXY2. 5th of August. 5th of August. Of August, June, July, now this is July 24, 11 of August. So please, if you have not subscribed to this channel, please subscribe, follow me for more, and that is what I'm looking for. So please, thank you. So I'll be expecting massive drop on gold this coming week. But let's see, once this key level holds, then DXY receives strength and gold will sell. But if DXY broke this key support level, then we will have to wait, be patient. I will come back again to come and continue the market analysis. Thank you for your time. Have a lovely and amazing week ahead, and watch out. I am designing a new course that will help you to explain, that will teach you step by step how to be a profitable trader. That you have the lenses of just open your chart and see if the market is ready or not. Because one of the things one of the skills of highly profitable trader is when a profitable trader open their chart, they know if market is ready or not. Once they check it and they discover that market is not ready, they close their system, close their desktop, and go and play with their friends and family. They are not looking for They only enter the market when market is ready. They are not enforcing it. Don't force market. Don't force market to be ready. Let it be ready and enter. So if you have any questions, comment, please drop it below, and I will see you very soon. Please, if you are not subscribed, subscribe, and I will see you later on